5 more days. Your taxes are due in 5 more days. If you haven't completely prepped for it, you might be trying to figure out what you can do to save some money, and hopefully that's one of the reasons why you clicked on this video. Ultimately though, tax planning is just a small number of the things that I hope to accomplish with you if this seems amicable. Here's the thing. If you are making over $144,000, assuming you're single, you can not use a Roth-IRA. And assuming that this is for you, the business owner, if you're the business owner making over $144,000, the next step up is a SEP IRA, where we can put away up to $61,000. That's a good option. That's a good plan, and that gets you going in the beginning. $61,000, tax deductible for your retirement. That's $61,000 of savings. What I'm trying to accomplish here, really quickly, really fast, is to give you quick outlines of what you can do before you file, because your CPA is not going to tell you this. Your financial planner, if you have one, which most people don't, and if they do, they charge them on a percentage, not fee only, or kind of what I'm going to propose here a little bit later. I think you might find this useful. So let me just continue. If you find yourself needing to have a tax bill more than $61,000 and you still want to go this retirement plan route first, you now have defined benefit plans. Those are capped up to $245,000. Again, you are a business owner needing deductions, thinking about your retirement. That's what I'm trying to sell. Your retirement is far more important than paying taxes, and the IRS so happens to give you a benefit for doing so. If you find yourself in a structural conundrum, because I've been only talking about small business owners, single business owners, solopreneurs, as some people call them. Structurally, depending on what you have, W-2s, K-1s, there's a couple other options available. Profit sharing plans, that also kicks in at that level above $61,000. That's the cap, and it's a little bit more complicated. There's formulas for a few of these things that I'm mentioning, but just broad strokes, this is something that you can do, or you should be considering, or you should ask your CPA. If you need a CPA, we could probably help you find one, because not every CPA wants to do things the way that we do things. And again, here's a little bit more. If you're in that category of needing above $245,000, there's another retirement plan that you could use. This one is called a 412 plan. This uses insurance and annuities. Not for everyone. It's expensive. These are not, maybe you make enough this year and you can put it away, and you could put off putting away the money next year. These are contracts. You need to be making serious money to be putting this away. And this is more of like a structural thing that we're gonna think about if this is where you're at. Again, 5 more days. Here's what's important. If you haven't already done so, you need to file an extension. Talk to your CPA. If not, and you know you're gonna owe, the IRS is gonna want penalties and interest and all kinds of fun little things on top of that. Make sure, if you know that you're gonna owe, send them a check, run through the numbers real fast, see what the income is, see what you should pay, and send them something so that at the bare minimum, they have something on record for you and you're not paying penalties and interest, because that's nobody's money. You can't write that off. You can't, no, that's dead money. So don't find yourself in that trap, because 5 days. CPAs are usually swamped right now. They don't have time to do tax planning strategies with you to get you the best return possible. Or if you're a homeowner or wanting to be one, you have to have the lay of the land ready for the CPA to plug and play, make it easier on them. I spent 15 years doing that with CPAs, tax attorneys, enrolled agents, you name them. I've seen a couple cases go through court. I've seen a couple, and this is IRS issues. I've worked with companies who need to create these retirement plans. I've worked with family offices that make strategic planning based off of just taxes, investments. My background is kind of well-versed in a cadre of things related to finance. We can get into that a little bit later, but I'm still trying to help you save more money in the next 5 days. Assuming you're able to file this extension with your CPA, wherever you are, you have the deadline for your entity, because all of this advice is coming for people who have entities, businesses. This is when you need to make sure that you have a retirement plan set up, funded, before you file your taxes for 2022, or any year for that matter. April 15, D-Day. Try to avoid it if you can avoid it, because if you're clicking on this, more than likely you need to avoid filing on the 15th. So file an extension. Your CPA should have some sort of procedure to do so. I keep hitting on this point because it's so important. I know some firms who in February 15th, they file extensions for everybody who they know they're not going to be able to finish, which is one of the smartest things you can do. Prepare. If you haven't prepared and you're still thinking about planning, this was the retirement plan section. There's not much further you can legally do with retirement plans. You can get into easements, but that's murky water and that's not my business. You can discuss expenses. That's the next alternative route, where if you have a good CPA, a good accountant who understands the code, understands bookkeeping and accounting, they should do a good job with your books, so long as you give good books to them. So that might be one of the most important takeaways from this whole thing. If your bookkeeping is trash, your tax return is going to be trash. It's not going to benefit you. It's not going to lead you into the higher waters that you need financially for you and your family. If you are the kind of person that's running a business and you become profitable, you'll understand taxes go hand in hand. You can't avoid them. But there's things and strategies that you can do to help mitigate them, to help propel your business forward. And expenses, in many cases, is one of those. Specifically, one of the more viral things, Section 179, which is where you take heavy equipment, machinery, and the more famous one, you take a big car that weighs over 6,500 pounds, truck, F-250s, F-350s, dualies, depending on what your business is, even a G-Wagon. Whatever it is, if it weighs over 6,500 pounds and you know how to structure things correctly, you have your business entity, if you purchase it, we can use Section 179. Your accountant, CPA, should be able to help you do this. And you should let them know what it is that you're purchasing, that it weighs over 6,500 pounds. and that you would like to apply Section 179. You do this by purchasing the vehicle before the end of December 31st, which is why if you go into any dealership that sells these big vehicles, there's usually a mad rush of deals about to happen. That's what's going on. As to the legitimate origin story for using Section 179, let's imagine that you are a farmer and you're buying equipment every single year. Well, you get a break from the government by being able to depreciate that item that much faster as opposed to a 5, 10, 15, 25-year span, depending on the equipment, to just accelerate it all at once, up to $1 million, depending on what the item is again. Pretty cool. But it comes down again to bookkeeping, expenses, understanding your book of business and what it takes to manage and run it with the expenses that are allowable by the government to give you a benefit. You should maximize those. I don't think that you should be pushing on the expense accelerator more than the retirement plan one, because I've seen in some cases you use expenses far more than the profits, and so you're running a loss. That's like Arthur Andersen Enron type accounting, and that's a foul. Don't do that. Murky waters. It's your duty as a taxpayer to pay your fair share and use the law to its full extent and capacity, and you'll be able to know that with a tax attorney and a really good CPA. I'm offering a community where we can talk about items that you have weekly, monthly, quarterly, figure out what it is that you need. If you need a CPA, if you need a estate planner, if you need a management consultant, what does your business actually need to run more efficiently and effectively? I have software that will help your business in the sense you'll know your assets, you'll know your net worth, and you'll know how your business lays into your financial plan for the future, while at the same time we'll be able to keep tabs on what's going on the retirement plan side. If you are in that special sophisticated family office side, which is my favorite, then we can figure out how this whole thing comes together for your estate, your family, and potentially generational planning. If you're the giving type, charitable giving trusts. If you're not the giving type, potentially having things offshore, potentially doing things in a manner that's all done through trusts. It all depends on who you are as a business owner. And I've had enough experience working in these multitudes of environments to see from the really small H&R Block client comes in with a tax return that is, let's just say, subpar, and getting it up to snuff, teaching the business owner how to get the books in line with the assets, plan for retirement, plan for the business, in some cases getting it sold, planning for partner agreements, buyouts, mergers, acquisitions, private equity, going public. I mean, the blue ocean is still blue. It's really on you. And I kind of want to help guide, because I've found myself in a good position with a handful of family offices, having worked in tax, having worked with tax attorneys, solving these issues, that now I find myself kind of wanting to build a community of business owners where we can do things together. I'm not saying I want to do everything alone, because that's damn near impossible. But finding the right people to do it with you, we can do that. I have plenty of connections to do that. If not, we'll find them. That's kind of my promise to you. So if this seems interesting, and if you think that this was valuable by me talking about a handful of things that you can do within the next 5 days, more than likely you should get that extension if you're watching this video. That's the bottom line. But if you'd like to learn more, if you think this was useful, you want to see what else I have to say, check out the community. I have a link below in the description. It'll be really easy. It's a flat fee. And normally these services of creating a financial plan, we typically charge around $350 a month to do that on the low end. For tax planning, similarly, $350 a month. And then for the financial plan along with some software, that's $150 a month. If you check the link below, you'll see I'm giving you a really good deal. I feel it's useful, it's valuable. It's just getting started. I haven't even really sent out any marketing. I'm sending this out because on a whim, I'm figuring 5 days we should do something.